Okay, now we are moving into how the market moves. Market can only move three ways. It can either move up, down, or sideways. So it only can look like this, look like this, or look like this. Yeah, so now we're going to get into the specifics on how the markets move. And the first one we're going to start off with is an uptrend. So usually uptrends tend to look like this, making higher highs, higher lows, higher highs, higher lows, higher highs, before actually reversing. Okay, so I want you to go to the chart and just look for higher highs, higher lows, higher highs, higher lows, higher highs. So on higher time frames, by higher time frames, I mean like the 4 hour, the daily, the 8 hour, the trend looks a lot more clear than if you went on to, like, let's say an hour. You start getting all of this kind of stuff. So your trend starts looking like this. That's still going to be an uptrend because it did not break this low. So an easy way of telling a trend is just going to the higher time frames, going on a line chart, and then you could just plot out. You can just write down where the areas higher highs, higher lows, higher highs, higher lows, and higher highs are. When there's no higher high, there's a sign of a potential reversal, and if there's a break of a previous high, then that's going to be a transition into a downtrend. So just as long as it's making higher highs, higher lows, higher highs, higher lows, and higher highs, and does not break the previous high, and you could still be in an uptrend. But if it does, you can look for the potential bottom, and if it rejects that, then it's still in an uptrend. And now for our second part, downtrends. So unlike uptrends where it's making higher highs and higher lows, downtrends consist of lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. And reading from candlesticks, lower highs, lower lows, lower highs, lower lows, lower highs, and lower lows. And looking from the line graph, you can easily see it better. We're going to just draw our trend. And then with this, if it breaks this high right here, then it's most likely going to reverse to an uptrend if it's not creating lower highs or lower lows. And now time for sideways markets or consolidations. So usually for sideways markets, it's making same highs, same lows, and same highs and same lows. So it's not making any higher highs, higher lows, lower highs, or lower lows. So it's consistently staying inside of an area. So for example, this would be an example of a consolidation. Let me just draw a rectangle, so right here. As you can see, it's making similar highs and similar lows. It's not going anywhere, it's not going up, it's not going down, it's staying within the same zone. So usually for this kind of stuff, it's a lot harder to trade compared to uptrends or downtrends.